George Salas is here with us on Change and Triumph. We are so honored to have you. Thank you for joining me on today's podcast, George.
Tené, thank you. I know we've been postponing this for a couple of weeks here. I appreciate you having me. I'm ready to jump in. So I'm super excited to be here. So thanks again for having me.
Yeah, we have some clips of our first conversation already out there on the internet, and people are anxious to hear more from you. We've gotten a lot of response from just a little bit of you. You and I met at a conference, which was, let's see, it was with who was that conference with? I'm trying, it's right on the tip of my
We
tongue.
made a fun launch.
That's
Fun
right.
launch. Yeah,
Fun launch.
2024, if I'm not
That's
mistaken.
right. And this is just a testament to conferences. You know, I talk about conferences in my buy income strategy. It's literally a whole chapter on conferences because I find that this is where you meet real people that are doing the work and, getting things done. Wouldn't you agree?
100%, because the people that are doing the work, they are in it to build the relationships also. So they go meet other people that are doing the work. And the only way to do that is in paid groups like conferences and masterminds, right? So I absolutely agree with you.
How did you end up getting into short term rentals and real estate in general?
Yeah, absolutely. So that's a kind of a long story, but I'll make it short for you. So I'm going to take us back to 2007. It's when I first started in the hospitality business. So I've been in hospitality for almost 20 years, if I'm not mistaken. So we are in 2026. That gives us 19 years. Incredible. Joined at that age, I started working at restaurants and bars as a server, bartender, and I transitioned into event promotions and then productions. Right, so I was a producer of a production company for a while. I did that for 10 years, and at about year eight, I got invited to participate in my first investment and as a limited partner. And then I went and did that. I was also the marketing team for that company. And they put together a venue, which is our own venue. And we ended up having our own event venue, which was also a nightclub. And then we did events, one-offs, and, in various times. So about a year and a half after we opened this venue, which took us over 2 to 3 years to open, I had invested over $300,000 out of my own cash. Okay.
Wow,
This is over those 2 years that this was a build out. And
phenomenal.
yeah, and I had, you're gonna be very it's going to shock you what happened later, right? So I did not have the knowledge, I did not have the skills, and I didn't do the proper due diligence on the team that I was partnering and investing with. So this venue got shut down after a year and a half. So every dollar, every penny that I had invested of my hard-earned work that I had pretty much saved for a handful of years, we got shut down. We got closed. And the biggest lesson there, out of many lessons, is that when you go and partner or you go and work with someone, get to know them first. But beyond that, get to know their work ethic and really understand who you're partnering with. Do your proper due diligence and then go in business with them. I did that, but I was so unsophisticated that I didn't know any better, right? So it was my fault. And when we got shut down, we lost over $1.3 million overall the investment, right? And from
Wow.
there, 300,000 was mine. So I was broken, not just only broke, right? I was broken and I had to start over. So to me, that was pushing me over the edge. Sometimes we get tired, right? And we go so far and we're struggling and we don't make the change. It's many, many people. We just keep going, right? And keep trying to find solutions to things that don't have solutions. So most people don't pivot, right? They don't pivot in a sense that they don't do something drastic about it. For me, that was it. I had been in that industry for 10 years almost. So the following year, I had nothing. I had to start over. So it was a race from start over from the bottom again, all the way till where we are now. And that's how I got into short-term rentals. I got into real estate first in 2018, and I wanted to build something that was more sustainable, more impactful than just me. Okay, and I, I've done that to a certain extent, per se, but it was hard work at first. So I was working 18 hours a day, driving a Toyota Corolla 2000 or 2001 Toyota Corolla for several years, and working, doing several flips. My first year I did about 10 real estate transactions, and then I got my first 10 short-term rentals in the middle of wholesaling. I had a great month in that year, so I made the transition, and I made the choice, which is the hardest part for many people, to make the choice to make that big change. Right, Tanae?
Right.
So that was
Yes.
the big pusher. Okay. So we'll love to keep sharing to where we went there. But the hard truth is that desperation and frustration and just wanting to start over and needing to pay the bills and cash flow was what led me to find out about short-term rentals. And that year, I ended my first year with $300,000 in revenue for the company, and I lived on $20,000. It was nothing but struggle and hard work. Okay. So that's the
It seems like
beginning. Go ahead.
it seems like you're a serial entrepreneur. And even though you feel that you are you got taken, from the investors that you invested with as an LP, wouldn't you agree that since it didn't happen right away, there was a year and a half of actual business done, and
Yeah.
that happened in the midst of the 2008 crash. If you started in 2007, invest in 2007, and then you got 2008 and a half, is it is it really their fault, or you made a informed decision and circumstances are uncontrollable?
Correct. So just to clarify a little bit, I started in the industry in 2007, and I ended up investing into this venue 2015 to 2017. Okay.
Okay,
So yeah, so 2015 to 2017. So 2015 is when I started, when we opened the venue. So my investments came a couple years before that. So it was 2017 is when we closed, per se.
okay,
Okay.
alright. And how would you categorize that? I mean, I know you say this isn't what you exactly wanted as an outcome. It seems like you're an accredited investor and you were pretty well informed. Wouldn't you agree?
You know what? At that point in time, I was not accredited. I am today, but we had invested into this partnership. I had no knowledge of what that meant at that time, and the group that put this together put it together without the proper PPM. There was no PPM. So, and I didn't know that until many years later, which, today, we're fund managers. So we understand what needs to be done in order to take investments from other people. So it was a very uninformed decision because I was unsophisticated, and that was a big mistake. But at the same time, it was a big lesson. And a lot of people go through 4 years of college. I went through 2 years of hell, and I learned my lesson. But that sometimes pushes you, if you think about it. When you go and make big mistakes, they become lessons, they become wins, because they not only push you to do something that you've never done before, but they also help you elevate yourself to places you've never been before, because you are transforming yourself from that rock bottom. Okay. And that's what I've done. I've transformed myself. And I urge anybody listening out there, when something bad happens to you, which is just part of life, you've got to get up harder and stronger. And sometimes that takes long. That takes a while. And that's what happened after all of that. That's how I got started in this industry.
Course, of course. And when it came to short-term rentals, it seems like you found your home there. Did you see when it comes to do you like Airbnb, Booking.com, VRBO? What's the platform that you like most?
Well, we have a love and hate relationship with Airbnb because they're the big dog and they're the hardest ones to play with, right? So that's what we use. And my home is definitely short-term rentals, 100%, right? But it didn't start that way. I was fixing and flipping, I was doing renovations, and the need for something more predictable and consistent, which was the cash flow from, from operations, from running these short-term rentals. That's what pushed me to say, I don't want to fix and flip anymore. I don't want to wholesale real estate anymore. I need something that's going to pay me every month, right? Consistently. And that was a big change for me too, choosing which lane I'm going to go into. So the rest is history.
It feels like you are not only telling us about your journey, but also that you need to pick a lane.
I agree. Yeah, sometimes when we're trying to figure out which lane to go into, we make uninformed decisions, and that happens, right? So sometimes people don't even make a choice and they just stay in the three lanes. And that's what hurts the most, right? You've got to pick a lane. And the reason for that is because you know what they say, right? I'm just going to make an analogy of this. When you go talk to a doctor and you have some heart palpitations, do you want to go to a general doctor or do you want to go to a heart doctor, right? So if you want to become so good at something, you've got to be a heart doctor. Heart doctors get paid the most money, right? More than general doctors. So for me was, what do I want to be? Just a generalist real estate investor and go do three, four things, never become the greatest in the world at one of them. And I had to make a choice. And I loved the fact that there was other reasons for me to make that choice, but I went all in. 5 years later, we're here sitting in this great room, and I'll get to meet amazing people. We're driving a $30 million portfolio right now between our funds and our investments, and we're a full operator and build and platform builder for say. But we could talk about that later.
And
Super excited.
but wow, $30 million portfolio. At this point, you decided in 24. Did you decide, was it 24 that you saw the opportunity to become a fund manager? And what was the reason that you decided to go that route, to raise capital the same as the same as you had experienced already, but doing it the right way? What was the thing that got you to pivot directly into raising capital and becoming a fund manager?
I love that question, Tené. Thank you for asking that. So let me bridge the gap here real quick. So at the end of 2018, had about 10 short-term rentals, scaled to about 20. And by the time COVID hit, I had about 40 short-term rental doors. A handful of those were actual homes. The rest were rental arbitrage deals, which we would rent and sublease. Okay.
Got
And
it.
I was doing a lot. We went up to 55 under management, in 2021. So as we were scaling, right, we were scaling a property management business for say, with rented units instead of owning our own properties. When I met my wife back in 2020, we not only start working together at first, we partnered and we created our first company together in 2021. And then we got married later at the end of the following year. So the big transition for us was George, Mona, that's my wife. Like how do you take what the little that you've built, this is 2022, and then make something more meaningful, create something more impactful and something bigger that can help others, but not only yourselves. And how do we scale our own portfolio? Right. So we
Right.
started buying some of our own properties, right? This is back to 2019 to 20 when we started. We had a couple, but by 2022, right, we were already doing seven figures in our business, but we didn't know how to scale it. We were just stuck, right? We're stuck at a certain level. And we again had to make a choice. How do we create more value? Jim Rohn says, to get to where you want to go, you have to help more people get what they want.
That's right.
And what we figured out is that in order for us to get to where we wanted to go, we needed to create something that would help other people get what they want. Right. So we went all in into learning how to build a fund or a syndication in 23. Okay.
Okay.
So 2023, fast forward to when you and I met, I was just forming our first fund. And towards the end of that year is when we launched, right, the first iteration of our fund. And this is not an easy thing. It took us 6 to 9 months to really learn, right? Even though I'm a fast action taker, but sometimes you can't make informed decisions again, right? Based on my
Right.
past mistakes, I needed to learn how to create this platform, right? Or how to create what we're building now. And that took a while. Then launched the fund. And then we were able to say, okay, now we've got to refine. When you launch a product on the market, you've got to figure out also who is the product for, who is your preferred client, how you build your positioning, your brand. And that is not an easy task, right? So despite of being a marketing expert, a branding expert from having the production company, and now I needed to create an investment platform, right? And
Right.
that was not just a struggle, but it was just thinking through each step. And it took us so long today that now I could go back and launch another one, which we just did, with
Nice.
my eyes closed compared to before, right? So the
Right.
lesson here for the audience is that you've got to have patience when you're creating something bigger than yourself. You've got to
That's right.
establish yourself, create the relationships. We are in a relationship industry, right?
Right.
That's what
Right.
we're doing. So that was the push. What made me say, what are we going to do now? It's scaling our portfolio, and it's what am I going to do with my wife and our son that was born a couple, towards the end of 22 as well. You
Congratulations.
know, thank you. So the push is there, and now it's about impact and legacy, right? So yeah.
That is phenomenal, and it certainly seems as if you have paid the price. And I think most fund managers that get into the space, they have paid the price with their own portfolio, gone through many cycles, as you said, 20 years of cycles. You've made the mistakes. And now, because you made that mistake, you are providing a product for people to invest that actually cash flows and you're able to scale. Do I have that right?
You got it absolutely right. Percent,
Awesome.
right? And that takes time.
Awesome. Right. So at this point, you've identified that your ideal partner is a capital allocator or a fund manager. So you're looking for, the who or your how. This is what you want to do right now is to replace yourself as that capital raiser and bring on a capital partner. Have you considered a capital placement company like an investment bank?
So let me tell you a little bit about what's happening right now. Okay.
Okay,
So we signed an agreement with a broker dealer team. So we have our first team. We're working with the marketing company as well. That essentially is a team that has an agency, right? And they're building out our marketing engines, and then we build a
wonderful,
relationship with a placement. So that's
wonderful.
the other arm, right? So a fund manager is great. We have raised several $1 million with fund managers, but at some point, sometimes those relationships easily 4 to 6 months, and it's a slow process. If you create something that is, again, let's go back to the lesson of 2018, 17, sustainability, something that you have control over, right? Which is having your own acquisition arm, right, of
Right.
investors, and then your lead generation engine, right? So that's the next step for us as we build our fund manager relationships. We're also in the beginning stages of building our investor pipeline.
I love that you are on this journey. I'm on a very similar journey. And what I find is that most fund managers have, you know, they're thin on actual capital, but heavy on deals. Do you find that or vice versa?
I would say for us, we are a full-fledged operator and vertically integrated from acquisitions, property management, and then design as well, right? So I would say deals come, not all of them are good, but as an operator and as a real estate investor, right? We definitely get more deals that we can handle. So when operators jump into this world and start raising capital, it's just like starting a brand new business, right? And raising capital and partnering, it's a brand new business because it's a relationship business, right? So
Yes.
that takes a while. So we have way too many deals for the capital we are able to bring into the platform right now. But that's
Yes.
okay. We're working on solving that problem. That's a good problem to have, right?
It is a good problem to have. And you spend 6 months building what you call a fund manager kit for others because of what you've learned, with over 50 pre-built assets to help partners raise capital in a little as a week. So it's like you are providing the tools to other fund managers. So why is systemization an ultimate product you're selling to partners? And how can that help others, other
I
fund
love
managers
that.
like yourself?
I love that. Thank you for bringing that up, Tanae. So yes, we built, call it a fund manager program. Okay. And this is for anyone that has raised a decent amount of capital or hasn't raised more less than $500,000 and does not have the systems, the assets to be able to plug and play. Okay. So what this kit does is it's essentially the core of our platform and
Mhm.
provides all the assets that a fund manager needs to be able to plug and play into any deal. Right. That's from a customizable pitch deck, one pager, a system in the back, the vendors needed to set up your automation campaigns, your fund manager portals, and even your legal. So a system to do all that. And even the administrative part, which is one of the reasons why a lot of people don't want to jump creating a fund, right? Which
Right.
is so many headaches in the back end, right? So we put all that together and figured out that if we build something that would make their lives easier, right, by creating all of these systems, then we would attract more people. And when we did that, we did, and that clicked. Okay,
Wow.
and yeah, it took a while to build, but it clicked. Sometimes having the infrastructure is what's missing in an entrepreneur's world. So if you create even the infrastructure in phases, it helps you get ahead because most of us that are building companies, they're building them as they go, right? And it's the pure truth. Nobody has it all figured out.
Right.
Everyone, everyone
Right.
is building things as they go, right? Unless you have hired a team of professionals to build every aspect of the business, most of us are just putting the pieces together as they learn and as they go. Truth.
Even the
Would you
team,
say though?
even absolutely. Even the team that you put together is learning as they go because everything is changing by the minutes. It's like it's so funny because I talk about this at nauseum, the difference between Blockbuster and Netflix. Blockbuster missed the opportunity to go and put their videos online and they were way, way ahead of Netflix, but they, lost out because they didn't make those moves. And that was Wayne Heisinger, I believe, that owned that company, and is very interesting because he had that team, and that team, was supposed to execute, but they relaxed. This is why I love that
Hmm.
book, Always Day One. Have you read that? It talks about how companies
Always.
like Always Day One.
I have not, but I'm gonna have to download that on my Audible.
It's really
Yeah,
good
this
because
month.
it talks about how Jeff Bezos and Mark Zuckerberg and Elon Musk and all of these guys are constantly training their team to always be a startup.
Hmm.
So everyone has to continuously improve and innovate on a regular basis. And I just thought that was phenomenal. So many fund managers struggle with one very specific thing, and I find this across the board, and it's skin in the game. Everyone was, okay,
Hmm.
well, how much skin in the game do you have? And the problem with raising actual operational capital to be able to cover those operational costs, to be able to cover, the team that keeps it always day one, because when you raise capital, it's usually going directly in a deal. Drawing from the holy grail of investing, how are you using GP stake buying strategies to solve the operational capital gap that stops most emerging fund managers in their track?
Love that. Love that question. Very, very niche and specific. So, one of the things that we have always been just really focused is building our own portfolio. And so, when you do that, you're investing for yourself, right? It's a whole completely different game when you go into investing with a fund or syndication or a group of people. So we've invested over $1 million of our own capital, into our own deals over the last 8 years. And today, having our fund, right, we're always finding ways to put in some of that skin in the game, right? For example, our first fund is putting in cash. Our second fund, we're putting in equity, over $1 million in equity from the GP side for this specific deal as we buy, right? We buy some of these assets, right? So, and that's it's something that I feel it's very, very important. And the struggle here isn't, let's get the cash and put it in and get the returns. Is the struggle here is how do you build your company while investing alongside, right, your investors and not run out of cash as a general partner. That's the struggle, right? Because a lot of the payoff of when you're a fund manager or a syndicator comes with time. It comes with
Right.
the exits, right? So the little fees that fund managers get are very little compared to, right, what you would say if you're running a service-based business for say, right? So, and they take a while. So there's a big difference there. And so the focus is figuring out and being creative of how to invest alongside your investors for alignment, as well as willing to deliver as much value as you can, right? When doing that, right? That's the struggle. And I've seen a few ways to solve that. And I don't know if you've ever heard Bridger talk about GP stakes, right? So one way
Yes.
to do that is to have a GP stake partner, right? So we
Yes.
haven't made it there yet. We can get into the specifics if you want, but a GP stake partner essentially would come in and buy a piece of your general partner. Simply
Yes.
put in infusion and operations capital. That capital partially gets invested into operations and the rest gets invested into deals, right?
Yes.
So,
Yes.
but yeah, that's
Yes.
a little bit of that.
And so you heard it from Bridger, but funny enough, Bridger, Tony Robbins had provided us with the Holy Grail of investing. That's what I was talking
Yeah.
about. And at that event, and in the book, he talks about how advantageous it is for an investor to buy into that GP stake. So, for one, it helps keep operations going. And for two, now that investor isn't just an LP waiting on specific funds, but they're able to get a piece of the 2 points that the fund makes and whatever the fees are for acquisition fees and underwriting fees, whatever the fees are that the fund has in there. So I haven't heard Bridger, but I read it in Holy Grail of Investing. And I think we're alike in that respect. I heard you mention a minute ago, Audible. And as a matter of fact, last time we talked, you credit Darren Hardy and the principle of growth and learning as the third leg of your success tool. So it, you listen to 40 hours of audiobooks and training a month. How does this obsessive commitment to learning translate into higher returns for your capital partner?
Fantastic questions. Well, learning is basically the foundation of everything. It's your infrastructure. But it's not the only piece, right? Execution and action is the other half, right? So most people learn and they hold that information or they forget it, right? So learning creates growth because it helps you gain confidence to execute. Once you execute, right, you elevate yourself by creating not just new opportunities, but also bettering your company. So the fact that that's been part of my journey has always been, let's move it to number one. It's been the key to everything I have built so far and that we are building today. So it's the key to everything because if you didn't build your foundation. So let me give you an example. Okay. So when I started into the personal growth space, it was all about how do I get my mind in the place to be able to, not just accept, but go through this journey of creating something very meaningful, something larger than ourselves, right? Like an investment company or a real estate operator, right? Mindset always first, because sometimes you get stuck. That mindset keeps you going. It keeps that drive within me, right? Then that mindset gets you to grow and execute, even if you might make mistakes. So the fact that you worked on your mindset, you pushed the trigger, you accelerated, you drove the car, you're going to make mistakes. You're going to go over, over struggles, right? But
Right.
then you get better as you go. No matter what, you're
Absolutely.
always getting better. So if we had to say growth and learning, it's probably the number one, the
Right.
most important piece that drives
Absolutely.
success, right?
Absolutely. Now, when it comes to process, you recently helped a friend go from 0 to building a multi-million-dollar company, and you had him basically track the process from A to Z. How does tracking a process, rather than just marketing the returns, but actually documenting that process online for people build investor trust?
I love that. So if you track your process from beginning to end, you not only get to document it and be able to show it off, you're showing your track record, first of all. You're showing true results, whether it's online or on your emails, right? You're showing what you are doing, right, in an organized way. And as I used to be a producer in a production company, right? We obviously, when we started, we lacked tracking most of the process, but when we hit, let's call it 2021, 22, is when I started working with a few people on the consulting side, right? And I no longer do that because of time. But one of my clients and good friends needed some help, and today he's doing over $1.2 million in short-term rental revenue just in 5 years, right? By emulating the process, and he's tracked it all. And it's, to me, it's very important, very key that we track our process. It creates huge investor trust because they see that you're actually doing it, you're on the ground, right? And essentially, what you're doing, right? It builds trust, it builds credibility, and it also helps you go back and realize how far you've come, right? If you do it for somebody else or if you do it for yourself, we've done the same. It helps you realize. This morning, I was listening to Darren Hardy again every day, right? And then his big thing was, look at how far you've come. Document that thing, right? Look at how far you've come. Do it once a quarter, once a month, whatever it is, and write it down. Write it down. Okay. And then this bridges into personal growth, personal development, journaling, but it's all about tracking it, not just for your clients, your investors, but also for yourself. You need to know that. And that pushes you over the edge. When you sit down and you internalize something that you've achieved, that is going to create more confidence within you to take the next step in the journey, right?
Absolutely. Absolutely. I love Darren Hardy too. I think it was early 2000s when I read Success is a Journey, and it helped me. And what he does, one part of that book that stuck in my mind for years is he writes down what his wife did great every single day so that he could focus on the positive part of what happened that day. Let's say she folded his socks nicely. Let's say, she picked him up from work. Whatever it is that she did perfectly that one day, he wrote it down in a journal. He writes it down in a journal every year and he gives it to her at Thanksgiving. Did you know that?
Wow. I know. And I have the same journal, but I did not do it every day. I do write this stuff every day, and I got it from him. That's so
Yeah.
amazing, right? That, people can do that actually. So
Yeah. Yeah,
got
because
that
you just
lesson
kind
from
of
him for sure.
yeah, you expand the positive of that moment because there could be one thing that she did that you didn't like, but if you focus on the thing that you did like, then you just make everything so much, just focus on being grateful, and that I think is the earmark of most successful people. So now currently working on a book about short-term rental exploitation, and it's coming soon, and it's basically going to be helping people, with your upcoming fund or the fund that you just launched. So if an investor wants to move from a W-2 wage earner to passive income, what would you say is the first thing that they should look out for in an operator's back end before they wire a single dollar?
Great question. Okay, so going back to the book, it's going to be called Experiential Short-Term Rentals, and it's focused on fund managers and investors. Coming soon.
Exploration, not wait, 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 wait. It's exploration,
Experiential.
not experiential?
Yes,
Are you saying
experiential.
experiential? Okay, I thought it was the exploitation of short-term rentals. Okay. Thank you for the correction. Sorry about that. Okay.
You're very welcome. You're very welcome. No problem. So yeah, the can you give me the question again? I'm so sorry, I forgot.
Yeah, well, no, let's tell us a little bit about that book. What do you what's coming? What can we look forward to?
So the book will be focused on our process.
Okay.
And the first thing that an investor should look for is essentially, what is this operator's track record? Have they done it before, and how many times have they done it? Can
Mhm.
I trust them with my money, right?
Right.
So that's the key, right? Then obviously the relationship is next, but a lot of people want to raise capital out there or do investments with other people's money and they haven't done anything, not saying that you can't do it, but you got to go build that expertise and hone into your craft, whatever you're doing, right? Go through this struggle and honor it. Just like Brandon Bachar says, honor it every day and learn from it so that you don't make those mistakes with other people's money or investors, right? So you want to make the mistakes first with your own struggles, with your own trials and tribulations, aka with your own.
Wow. So I'm so excited that you joined us today on Change and Triumph, and you are a fellow fund manager building a fund, actually already built a fund, 30 million in AUM and short-term rentals. You're one of those alternative investments that people just don't know about as accredited investors. And what's awesome is an accredited investor can do their due diligence with you. They can see your track record and they can, especially they have the opportunity to view this podcast and, learn a little bit more about George Salas. And you've given us some phenomenal insight. And I just love that you told that very pivotal story about losing $300,000 at the very beginning so that and this was what set your journey into wanting to do it correctly, being able to scale, and it shows just your attitude towards perseverance, your attitude towards success. You got to pick up your bridges and go again, right?
Grit is everything, when you're getting started, because you're gonna fall over and over. And it's not about how many times you fall. It's about how strong you get up after you fall.
Thank you. It's how strong you can fall. Now, if you were past now, it's a funny thing because in the buy income strategy, I focus on taking earned income and moving into that passive income
Mm.
play by investing in companies like yourself, investing in fund managers that have already gone through all of the heartache and pain. So no need to start an Airbnb and deal with how do you get it cleaned? How do you do this? How do you do that? And scaling to 55 different rentals and then go and then getting hit by COVID and all of this. But having a trusted private equity fund manager that has the expertise basically to go out there, find those deals and deliver it where someone can replace a portion of their income with passive income. I am so grateful to have met you at Fund Launch, and you're, a fellow fund manager that's out there grinding, getting it done. So thank you for being on Change and Triumph. And is there any last words, anything that our listeners need to know about you and your upcoming book? or how
Yeah.
they can reach them.
Yeah, absolutely. So the book is called Experiential Short-Term Rentals. It's coming soon. A way to reach me personally is as my personal website, George Salas 360.com. And all my socials are there. Love to connect. And I really appreciate you having me today. And just let's go crush it.
Let's crush it.